test. Okay. Let's start over. It is 8:03 a.m. Chicago time on Monday, the 21st of December, 2020. This is Christmas week. This is a shortened week. We have a 3 full days of trading and 1 partial day, 1 closed day. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1903. The big news today is this new coronavirus strain that was discovered in the UK. The British Prime Minister Boris Johnson said the mutation appeared to be more transmissible, although scientists are still reviewing the data and have yet to reach a final conclusion. British health authorities say the variant does not lead to an increase in cases of severe illness and does not cause more side effects, although, it remains to be discovered. However, apparently it has an R naught value that is even higher and is more resistant. So this is a different strain of the coronavirus, and this is, of course, a shock to the markets as we come into a period where euphoria was setting in with the COVID-19 virus being distributed. On top of that, Moderna got approved by the FDA on Friday and is already in distribution, according to a friend of mine in the industry. So, good news confronted by bad news. Sounds like it is this thing is mutating and it may cause more problems, and so the market is responding. So that's where we stand. Congress passed the $900 billion stimulus package. They agreed on the $900 billion package. They're going to need to put it up for a vote, and then it goes to President Trump's desk to be signed into law. In case you haven't heard, Tesla starts its first day in the S&P today after some crazy trading on Friday, and that's where we are. So the market is a little bit nervous about this newly discovered COVID strain, and that's where we stand. Let's take a look at the summary sheet of what we've got. You can see outflows out of the indices, strong risk-off sentiment, with the S&P down 1.62%, Dow 1.44%, the NASDAQ 1.08%, the Russell getting a big hit at 2.56%, the Euro stocks and the DAX are down even farther as they are closer to the risk area. Crude is off 4.3%. Copper's off 1.97%. Again, clearly risk off. The bonds are higher. The Bund is higher. The 10-year notes are higher. Gold is somewhat unchanged. Silver is higher. And the cable is getting hammered as well, of course, for the same reason. This today, we're looking at existing home sales. No, this isn't correct. You can ignore the numbers that are listed there. What is due today is the consumer confidence number out of the Eurozone at 9 a.m. Central, 10 a.m. Eastern, and retail sales out of Australia. That's it. There's not much more on the calendar in terms of expectations. The overnight volumes at let me see where it's at since this thing's been printed. 459,000. The edge of the 1 sigma, or what we would consider normal, is 400,000. So volume is quite a bit higher than what we would consider to be normal within range. The overnight range in the S&P is about 128 points, which again is much, much higher than the 52 that we would consider normal. Overnight inventory is 98.5% short. Just as a point of reference, the mode for overnight volume is 296, and the mode for the range is 31 points. Market condition is a downtrend recovering. Currently, the market has pushed down to the high volume, the MCHVN, or the high volume node from November 9th till now. This has been a big area at 35.99.75, went to 35.96 in the S&Ps. That's where we stand this morning. I'm not going to spend much time on this, but we'll do a quick review. Friday, way off. Friday was expected to be a relatively quiet day. As you can see, I was looking for a choppy open that pushes the high. And then, as I said on Friday, the market looks extended to me. I talked about this a fair amount, that the market is showing signs that it's overextended to the upside, and it's likely to revert back. And so the expectation for Friday is open in an open auction, squeeze the high, and then fall back in and go sideways throughout the session, expecting it to rest in the 37.10 to 37.13 area, and just hold steady and build a balanced profile. The secondary scenario is more of what we got: a push of the overnight high, poke through, and then it falls back into the range, except Friday fell quite a bit into the range. Here's what we saw. We pushed to 37.1850, and then it's responsive immediately. This is an open rejection reverse, potentially even an open test drive in a way, and it just stays way ahead of the mid and VWAP, and continues to push. The most significant things about Friday is it took out the prior day's session low, ending one-time framing up on the daily, or ending the trend up on the daily. This is the first sign that the market is starting to experience some weakness. And so here we are. We push through the prior session low, come back, check it, continue down after the impulse down, come back and check it again, continue down again, and so on and so forth. We come back and check it a third time, really, and continued lower, and so on, and then finally come back and break through in what looked like the beginning of bigger rotations higher. You can see the rotations starting to expand higher, and so now we back off the short side, and then the close had quite a bit of activity here. You could see that the close was right here, the cash close, and all of this occurred in a very, very short period of time. Very tight zipper that set up a launching point, zipper break, pull back to the middle of the zipper, classic kind of a setup there, scalping setup, and then starts to continue back. Where do we end up? We end up right on top of the close of the prior day. So on Friday, we created what I would call a pin bar. It's a fairly common term that's used in the industry, nothing that I've coined. But if we look at how Friday responded compared to the prior days, I'm going to expand the daily. This is, excuse me, this is the RTH only, a 1 bar per session. This is a pit. You could see that on Friday we opened, tested higher, and went all the way through. So we broke one-time framing up on the prior session. We broke the low of Wednesday, pulled right back into this 85 area, this big area that we've talked about a fair amount. This 85 area, this kind of point of control area, balance area, pokes through it, and then it came all the way back up, and it ended up closing right where Wednesday was. There's Wednesday's open and close. Wednesday's open and close is a doji, and then we have this pin bar with a clear excess. And so what we would expect based on this action on Friday is for it to reopen and squeeze higher, because we have a clear rejection of lower prices. The market really bought up all the prices below into that 85, 86 area and came back, so we would expect it to go higher. If it does not, and this is from my notes last night in the Convergent Trading Head Trader channel, if it does not, then this creates a lot of overhead resistance here. A lot of overhead resistance as we start to work ourselves through the flagpole here. We came down and we pushed back up, and if we cannot continue or sustain above 37.12, then it is very likely to squeeze weak longs, late longs out, and that's what we have. This news, of course, helps a lot, and we've moved down into the MC point of control, 36.59 and a quarter, right here. This MC point of control. So this distribution has two distributions. Okay, this area has two distributions. One to pay attention to is at 86, and the second to pay attention to at 59 and a quarter. We're currently trading at 36.55, and so we're in a double distribution MC area and looking weak. So overall, with the overnight low at 35.96, 35.96, way down in here, you could see that the overnight broke the weekly one-time framing up as well. So this thing is likely to run into quite a bit of resistance. There's a line right here. There's quite a bit of resistance above, favoring the short side, selling rallies today coming into it, unless we have an impulse up that brings us into the range of Friday. Other than that, going to be looking to sell any weak pops or pushes higher that that get confronted with some selling are an opportunity to get short, in my opinion. Okay, so that's where that is. Let's dive right into, well, let's take a look at what's happened overnight. Overnight, the structure, come on. There's a lot here. We've covered a lot of range, and we've been in a tight range, so I have a lot of stock zones. It just seems like a lot of noise. There's quite a bit going on in this region, but you can see in the overnight session we have one distribution, a minor distribution, and then we have a major distribution down here, and that's where we are. We remain below the full session mid, full session VWAP. That's the first place we want to check on. We got well below the 3 vol sigma. We've pushed probably maybe a fourth and a fifth volatility close to close volatility sigma. This is extremely extended, statistically speaking, and it's likely to attempt to recover to the buy side early. And so we have some key areas above, including the 72-76 area, expecting this to be confronted with a fair amount of resistance, brings us into Friday's low, and we'll see how it plays out. This zone that we're starting to kind of break into right here, between here and here, is a low volume node, and if it starts to break the full session mid and VWAP, it is likely to run up fairly easily all the way back up. Into Friday's range. So as long as we stay below Friday's range, I'm going to favor more structured shorts and more scalping longs. So two different time frames trade in, and that's what I'm looking at for today. Okay, so let's take a look at what's expected for today's session. Again, quite a bit of range here. All right. Oh, before I get into this, I want to remind you that this Wednesday, the 23rd at 6 p.m. Eastern, we're doing this fireside chat. This current action makes the conversation even more interesting. This is a session with the head traders from Convergent Trading, people that I've known for quite some time. people who trade professionally and do a lot to help others within the community. We're going to be sitting together and talking trading in general. Please join us. You can find it at the number 2ct.pro/CT Fireside 2020. That's where you will find it. Again, go to ct.pro/CT Fireside 2020. You can also find the link in the description in the YouTube video. If you run into any issues, you can tweet at me, or you can just go to ct.pro and then hit the contact button if you cannot register or whatever. But please make sure you sign up, even if you cannot attend live. Sign up so we can send you the recording. Oh, here's what we're looking for today. There's going to be a fair amount of volatility. Why will there be a fair amount of volatility? It's because the market is repricing the significant new information, and as long as it does, volatility is going to be in play. Now we've built a nice impulse down on the 30-minute. You can see we're one-time framing down, pulled back. However, we did not have a continuation move on this impulse down. That still remains open. And what this is doing is it's almost reacting. It is reacting to news, but it's almost reacting to immediate news. And it's working its way back to the SOC. The SOC for this is way up here in above the 3,700. We're trading in the 3653, about 50 points away. I'm expecting this to continue higher. Overnight inventory is very, very short. As I said, it's at 98.5% short. So the expectation is an open auction that immediately becomes responsive. I'm looking for to test this full session mid and VWAP, which are stacked on top of each other. I expect it to stall out in the 72 to 76. If it's going to come up here, I'm looking for it to stall out in the 76, 72 area right up here before it starts turning down and getting back to the overnight point of control. The overnight point of control is right here at 3640, and to come back and retest this region right in here. I'm not looking for a lower low, although that would be nice. That would finish up the structure. But overall, I'm looking for it to push into 72 and potentially down into 3620 or so. This is a key area down here. Okay, 3620. And then before it bounces up. So I don't expect it to extend too much beyond where we are. It is a holiday week. It's likely to be lighter in volume, although the overnight session has traded very heavy. It's a bit of a market panic there, and it's likely that the move has already taken its course overnight. The secondary is an open auction that immediately drops into the overnight point of control, which is likely to shift up here. The overnight point of control consolidates and then starts to squeeze as we find that the panic, the early panic, has already been priced in, and we are getting responsive. I'm looking forward to get tangled up in the 76 region here, but ultimately it is likely to get back into the prior day's range, come back to the point of control and rest and remain under the 3,700. Okay, there's some stats associated with the last 2 weeks of trading, which I posted in the Convergent Head Trader channel. Let me pull that up. Sorry. Trying to manage a lot this morning. These are some stats here that I shared with the members yesterday. These are the last 2 weeks of trading for the last 5 years, in 2015, 16, 17, 18, 19. The sample size here is very, very low. The top number is the movement from the 2-week low to the 2-week high. And so the last 2 weeks had a 4.6% move in the S&P from low to high in 2015, 1.9 in 2016, 1.1 in 2017, and 13.1% in the last 2 weeks of 2018. Wow. 13.1%, 2.5% in 2019. The bottom number is the New Year's week from low to high 3.3, 1.9, 1.1, 9%, and 0.9. The data shows a positive skew of 4.6% over these, on average, over these last 5 years, over the last 2 weeks, and over the last week, there's 3.3% on average that the market rallies. So we'll see if this year does not comply, but overall, this is showing an upward skew towards the end of the year, and here we are selling off. So why am I telling you this? I'm telling you this to support the idea that prices down here may actually be quite cheap. We're opening in a gap down, and these prices may be quite cheap relative to the macro picture, that statistical picture. And so don't be surprised if we come back and start moving towards making a move at 3,700 here, as prices seem cheaper here. So be careful. I know this year is very, very special, and I mean that in the most endearing sense possible, but we are opening in a gap, and it's possible that scenario 2 becomes a dominant play. However, given the factors in play here, given the way the market's structured, given the volume profile, I'm going to favor the short side early. And we'll expect a response up first to help balance some of the overnight inventory, but I'm looking for it to turn over and start moving towards 36.20. If it does not, then we know that we're likely to play for 36.77, 76.77, and then back into Friday's range. I know that's a lot to digest, but here it is. This has been a long Trader Bite. Good luck. I'll catch you tomorrow morning. Take care.